Everyone, my name is Mike Walker. I'm the president of the Voluntary Benefits Shop. Thank you today for joining us for this installment of our voluntary benefits webinar series. We do this, once a month generally. So for those of you that are, new to this event, just be on the lookout for additional webinars, and you can, I think, get some valuable information. I just do want to let everybody know that this presentation is being recorded, and we will also give you the opportunity to ask questions as we progress through this presentation. So with that said, I'm going to go ahead and get started here with this content. So again, my name is Mike Walker. I am, as I said, the president of the Voluntary Benefits Shop. What we do every day is we work with consultants to bring these life with long-term care solutions, like we're going to talk about today, to their clients. My contact information is here, as well as our website, and you will have the ability to be able to reach out to us should you choose. And I'll pull this again up at the end, just in case you choose to reach out to us after this presentation. Couple of upcoming webinars that we have coming up. We have one next week, which is going to be a legislation update. We're going to provide some updates on what's going on around the country with the LTC payroll tax legislation in different states. There are a few updates from the last few months, as well as a couple of federal topics that we'll touch on. So if you're interested in that webinar will be coming up next week, January 23rd at 1 p.m. And then in February, we'll also be doing a webinar February 20th at 1 p.m. Will be a comparison of the available life with long-term care products. There are a couple of new carriers that are getting into the marketplace, and as well as the ones that have been there for a while, that have made some recent adjustments to their plans. So we'll be reviewing all of that, just so everyone who's interested can have a kind of a good basic knowledge of all the players that are out there and what their products look like. So the subject today is we're going to be talking about making life with long-term care part of your 2025 revenue strategy. And so this is really the only thing that we do at the Voluntary Benefits Shop. What we do, as I said, is we work with consultants such as yourselves to really bring these life with long-term care solutions to your clients in a very comfortable yet engaging format for their employees. And to give you a little bit of background on us, we've been around since 2013. We were formerly called Mid-Atlantic Benefits Group. We changed the name back in 2020 to the VB Shop. We're based in Havre de Grace, Maryland, and we bring these life with long-term care solutions to about 3,000 clients throughout the country of all shapes and sizes. Now, we work with all the major carriers out there that have this type of product, and we secure industry best underwriting offers from those carriers that we're able to utilize with our consultant partners. And part of what we're going to provide you and the client with is proof of due diligence and a recommendation. So we go out to the marketplace, secure the proposals, do a compare and contrast, and then make a recommendation. And then in full transparency, we show you the pros and cons of those various options that are out there. As we're talking about long-term care, I think it's important to kind of understand what the demand is like for it out there right now. And maybe some of you are aware of this, and maybe some of you aren't. But this is a product that is extremely, fast growing. You can see that, in 2023, the increase in new premium on these life with long-term care combination products was about 22%. So tremendous growth. And when we see the number come out for 2024, I think it's even going to be higher than that. The interesting thing is in terms of employee interest, 36% of employees, according to Eastbridge and their study, 36% of employees wish that their employer had offered long-term care. And the interesting thing is the generational mix, right? Like you can see that, it's not just boomers and Gen Xers, it's Gen Z and millennials as well that have interest in this product. So it's across the generations. Now, 29% of companies, according to that same study, are interested in offering or intend to offer long-term care in the future. And the other interesting statistic is that 51% of employees said that they would be interested in purchasing long-term care if their company offered it on a voluntary basis. So huge, demand, out there for the product, and huge interest, in this product. Now, in terms of kind of benchmarking data, a couple of things that I did want to point out here is if you look at the overall numbers of companies that say that they currently offer long-term care, you can see that that's down here at the bottom. That's a pretty high number for many of the different size organizations. But keep in mind that for many of those organizations, that's really been an executive level carve out of LTC, of standalone LTC, and very many of those programs are frozen currently, so they can't take new applicants. So there's really a much lower level of organizations that truly have an LTC option that's available for employees at this point in time, much less the non-executive employees. So huge opportunity out there for it. And if you look down here at some of these other states down here, or some of these other statistics, I should say down here, if you look at the percentage of companies that offer it on a voluntary basis, you can see the weighted average is only about 20%. So again, huge opportunity to offer it on a voluntary basis. And then the percentage of companies that are interested in a future voluntary offering, 24% of companies on a weighted average say that they are interested in offering long-term care in the future on a weighted average. So again, tremendous interest and opportunity out there for these, long-term care and life with long-term care programs. Now, when you break it down by type of industry, there's some interesting things here. And again, if you look at the number of companies that currently offer LTC, again, those numbers are a little misleading because again, it's really, many of those are the executive level carve out. But I think what's most interesting on here is the low percentage of healthcare companies, healthcare organizations that are offering. You'd think healthcare would be high. And while healthcare is relatively low in the percentage that currently offer LTC, you'll see down here it's pretty high in terms of the percentage of organizations that are interested in offering long-term care as a voluntary benefit in the future. In fact, it's the highest of all the industries that are listed here. But again, overall, 21% of companies here on the bottom column are interested in offering LTC to their employees on a voluntary basis, but healthcare, 36% of those. So again, a lot of interest, a lot of opportunity out there. And then I think the other thing that's important here is when you look at the overall per employee levels here, 72% of employees do not currently own LTC on any funding basis. 51% of employees would be interested in purchasing on a voluntary basis. And on a scale of 1 to 5, their buying interest index is really very high at 3.67. So again, a lot of interest, a lot of opportunity out there. Now, at the HR level, there's a lot of different things that are driving this conversation, and we find that it's very, very well received by HR teams when presented correctly. But there's again a number of things that are really driving this conversation. So, first of all, aging population. Population as a whole is getting older. People are living longer. So that's one area that's driving the conversation. But it's also the most underprepared for financial need in our country. And when I talk to people about, long-term care, most people haven't really thought about how to plan for it. A lot of people aren't really aware of the need, but it's definitely the most underprepared for financial need in our country. In fact, only 7% of our population currently has long-term care insurance. So that's driving the conversation. But also the potential for state-specific long-term care payroll tax legislation. Many of you are probably familiar with what happened in Washington State several years ago. I'm going to touch on a couple of legislative things here in a couple of slides, but there's been some talk in different states around the country about having long-term care payroll taxes, and that certainly drives the conversation at the HR level. And then there's also a disruption in the standalone LTC market. Most of you being in the industry know this, but there's not currently really a standalone LTC market out there. There's only a few carriers that have products, none that really offer it on a group basis. They require a lot of underwriting underwriting, et cetera. And that brings up the next point. These life with long-term care solutions, because of the preferred underwriting, because of the guaranteed issue, that really helps drive the conversation at an employer level, because you do have executives and employees that have pre-existing conditions that can't qualify for individual long-term care. And these guaranteed issue life of long-term care products really help alleviate that concern. And then just overall benefit package competitiveness. As more and more organizations put these life of long-term care products in, more and more other organizations are driven to look at it because they want to, keep up with their competitors. So there's a lot of different things driving this conversation. And really what that's created is just this huge uptick in organizations that are putting in life with long-term care. We've seen an explosion in those numbers over the last couple of years. Now, a couple of statistics, just general population statistics that you may find interesting. 70% of our population after the age of 65 will need some shape, form, or fashion of long-term care services, and 20% of that population will need that care for longer than 5 years. So this is something that really impacts a large part of the population, and for many of us, it impacts us for a very extended time period. And then here's a snapshot of costs. Any of you that have went through this with a family member, you may already know this, but it's an expensive proposition. The median annual cost for an in-home health aide is about $75,000. The annual cost of care in a nursing home is about $104,000. A private room in a nursing home is about $116,000. And the estimated cost of care for the final 5 years of life for a person with dementia is about $367,000. So these are big numbers. It doesn't take long for this to really negatively impact a family's financial security, a healthy spouse's financial security, retirement savings, etc. And I'm sure, as most of you know, these long-term care costs are not covered by health insurance, Medicare, or Medicaid in any meaningful way. But the problem is the general population does not know this. And so that's where our opportunity comes in to help educate, your clients, their employees about this huge need and be able to help them add this incredibly, valuable benefit. So let's talk a little bit about some of the legislative items that are out there. And again, we're going to be doing a much more in-depth legislative update on our webinar next week on the 23rd. But just to give you kind of a couple of kind of bits and pieces on that. So long-term care costs have become such a big issue that states, many states are trying to look at, how do they take the pressure off their Medicaid systems? Because what happens is that people exhaust all their assets paying for long-term care costs, and then they ultimately end up on a state's Medicaid system because they exhaust their retirement assets and other assets, and then the state has to cover them through Medicaid. And so in any given state, long-term care costs represent somewhere between, say, 15 and 40% of a state's total Medicaid spend. So, for example, you can see the state I'm in, which is Maryland, the state I live in. The total Medicaid, the total long-term care costs represent 24% of the state's total Medicaid spend. And you can see many other states in the country are in similar boat. And the reality is that's just an unsustainable level of spending for Medicaid, especially as long-term care costs continue to increase. And so what states are trying to figure out is how do they take the pressure off their Medicaid systems? And so quick recap, a couple of years ago, the state of Washington was the first state to do something about this. And what they did in the state of Washington was they created this state-run long-term care plan. It's funded by a tax on the workers of the state of Washington. So if I work in the state of Washington, I have this extra payroll tax every payday that comes right out of my check, and it funds this state-run plan. Now, it's a very minimal state-run plan. It's a lifetime maximum benefit of $36,500. So a drop in the bucket when it comes to costs, to long-term care costs. But what they did do in the state of Washington that set kind of an interesting precedent is they enabled residents to opt out of the tax if they could demonstrate that they had their own individual private long-term care insurance. And so if I have coverage, I can opt out of the tax. And so back in 2021, when they did this in the state of Washington, companies scrambled to bring a solution to their employees that would allow the employees to participate and then therefore opt out of the tax. And we helped many, many organizations do just that. And employees enthusiastically wanted to opt out, right? Because they wanted to control the dollars, they wanted to cover spouses, they wanted a better benefit, lots of reasons to opt out. Now, I mention this because since the state of Washington has done this, there's been many other states that have looked into it. And today's not the day for us to give, a complete legislative update. We'll get into more detail on that on the webinar next week. But what I did want to point out is a couple of things. So state of Washington actually on their ballot in November during the last general election, they had an initiative on their ballot that effectively would have ended their state-run plan and the tax. It would have made the tax voluntary, and if it's voluntary, who's going to pay it? And it would have ended the program. However, the initiative failed by a vote of 55% to 45%. Washingtonians, elected to keep the plan in place as is. So it stays in place. Okay, so the tax is still going on there. The state-run plan is still going on there. They may have some future legislation that focuses on strengthening the program, but the program stayed in place during this previous election because the initiative failed to make it voluntary. And just a couple of other quick updates. California, in my opinion, California and New York are probably going to be the next states to really enact some sort of state legislation. So if you have clients that have employees in California and New York, or they're based in California and New York, they should certainly be aware of this. There was actually an actuarial report of 5 proposed plans in the state of California that were delivered to the governor, insurance commissioner, and legislator at the beginning of last year. Unfortunately, the committee ended shortly thereafter, and being that it was an election year, nothing really happened last year. But it sounds like it's going to get picked back up this year, and who knows, maybe something will be put in place. We'll dig into this more detail, but you can see that the 5 program designs in California range from on the left-hand side being much more similar to the state of Washington to on the right-hand side being much more robust than the state of Washington. But what I can tell you is that some of these California plan designs also include an employer component to the tax, not just an employee component, and a much higher tax rate than what they had in the state of Washington. So it'll be interesting to see how that plays out. But again, on next week's webinar, we'll be going into, much more of the legislative aspects, including some things that are going on at the federal level. Let's talk a little bit about how these life with long-term care, programs work. So the easiest way to understand these life with long-term care programs, if you're not familiar with them, is they are a combination of both life insurance and long-term care, all combined into one program. And, they're very similar needs. Life insurance is about protecting assets if someone passes away, and long-term care is about protecting assets for a family if someone cannot provide care for themselves. But it's also about protecting my freedom of choice when it comes to care options, so that if my family, if I do want to receive care in my own home, my family has the financial resources, to make that care available. Or if I do want to be in a certain level of facility, my family may have the resources to make that available. Now, these plan structures vary some by carrier, but this is going to give you a pretty general plan design. The top left-hand corner, these plans all have a death benefit. And so the way that works is that if someone, signs up for this program and they pass away, it's just going to pay the family a death benefit, just like you would expect life insurance to work. Top right-hand corner, the plans have a terminal illness component, where generally they're going to advance, a percentage, in this case, say 75% of the death benefit right away if someone is diagnosed with a terminal illness. And then the long-term care benefits, this is where it says living benefit rider. Sometimes it's called a long-term care rider, a chronic care rider, a living benefit rider. They're all kind of synonymous, but the living benefit rider, the long-term care rider, is going to advance a percentage of the benefit each month that someone's going through long-term care. So in this example, we're saying 4% of the death benefit is going to be paid per month for up to 25 months. Now, after 25 months, the long-term care benefit does not typically end. It typically goes over to the lower left-hand corner of the screen, where it's going to trigger an extension of benefits, and in that case, it's going to extend that long-term care benefit for an additional 25 months at that same, say, 4% level. And then if someone passes away during that or at the end of that, it's still going to pay the family whatever that death benefit was that they selected when they chose the plan. I know it's a little tough to follow those percentages, so I'll give you a real numbers example here on the next slide. But before I do, just pay attention to the bottom of this slide. The trigger for long-term care benefits is probably what you're familiar with on long-term care plans. It's the inability to perform 2 or more of the 6 activities of daily living, or severe cognitive impairment. 2 of 6 or severe cognitive impairment is going to trigger the long-term care benefits. And that's pretty standard on long-term care contracts. And if you're familiar with long-term care, you've probably seen that in the past. Now, here's a real numbers example of how this plan could work. Let's say, I'm the applicant or I'm the policyholder, and I choose a $100,000 policy. And, top left-hand corner, let's say I have a heart attack, I have an accident, I pass away. This plan is just going to pay my family my death benefit of $100,000, just like you would expect life insurance to work. Top right-hand corner, I'm diagnosed with a terminal illness. In that case, it's going to advance me 75%, or in this case, $75,000 right away, and the remaining $25,000 would be paid to my beneficiary at time of passing. Bottom right-hand corner, this is my long-term care. It's going to give me 4%, or in this case, $4,000 per month for up to 25 months. After 25 months, it extends that long-term care with a benefit of $4,000 a month for an additional 25 months. And then even if I pass away during that or at the end of that, whenever I pass away, it will still pay my beneficiaries my full death benefit, which in this example would be $100,000. So you can see in a worst case care scenario, or maybe I go through 50 months of long-term care and then pass away sometime after that, this $100,000 life plan will have paid my family and I $200,000 worth of long-term care benefits, a $100,000 death benefit, for total benefits paid of $300,000, again on my $100,000 life plan. Now, I just use 100,000 as, a round number. I could choose a much higher benefit amount than that. In fact, with some of the carriers, I could go up to $500,000 of coverage or $1 million of coverage. It just depends on the carrier that we're utilizing. So a lot of flexibility there, but that's just a general plan design, plan structure design there. Guys, we'll pause for questions here shortly, but you also are free to enter questions into chat, and we will get to them here at the end. Okay, so guys, these hybrid products are really, really appealing at the employee level for a lot of reasons. And the left-hand side really kind of breaks down these reasons. Number one, when you take one of these life with long-term care hybrid products, it's easier to justify the purchase because you're paying for something that one way or the other is going to pay benefits. Either I'm going to pass away and my family's going to get a life insurance benefit, or I'm going to need long-term care services and my family's going to get, those benefits, or I'm going to get those benefits. And in many instances, both benefits are paid. Number two, guaranteed acceptance underwriting. People can get a very high level of coverage without any underwriting or any health questions. Level premiums, they're locking in a rate typically that they're going to be able to keep for the rest of their lives. The plans are cash value products like whole life or universal life, so they're creating an asset that they can take a loan out against, cash it in the future. The plans are also indemnity products, so they're paying benefits regardless of the cost of service, and they can, so even if my spouse is my primary caregiver and I'm not getting a bill for that, I would still get the benefits because it can pay benefits during periods of informal care, and the plans are portable, so you can take it with you into retirement, change jobs, whatever the case may be. Now, from a revenue perspective, this is what our broker partners routinely see, and these projections are very conservative. Routinely, they're going to see that they're going to earn about $500 per employee participant on these plans. So 10 participants, is obviously $5,000. 1,000 participants is going to create $500,000 worth of compensation. And again, these are very conservative projections. Certainly many times we see, much more than this. But this is routinely what our broker partners see when they, partner with us to introduce Life with LTC to their clients. I'm going to give you a couple of snapshots here of the type of participation that we get and the type of premium that's created and that type of thing. So you can see here that across the industries, we typically get somewhere in, say, that 20 to 40% participation range. And it doesn't matter whether it's blue collar, white collar, big group, small group, kind of across the board, we're getting that type of participation. So here's a couple of examples for you. This is a defense technology firm based in New York. 650 employees. Out of those 650, 151 enrolled. It generated $212,000 in premium, which created $84,000 in compensation to our broker partner. Here's a couple more of these. A 400-person financial services firm based right here in Maryland. They out of those 400, 75 enrolled. It generated $220,000 in premium and $88,000 in comp to our broker partner. You can see that the average per policy much higher in this group because a more highly compensated workforce overall. And here's a blue collar one, a 350-person trucking company. Out of those 350, 104 enrolled. It generated $171,000 in premium, $68,000 in comp. Those are long haul truckers. They all enrolled via our benefit education call center. And maybe your clients aren't that big. Here's some smaller ones. A 90-person private school, 27 out of the 90 enrolled, generating $48,000 in premium and about $19,000 in comp to our broker partner. And here's some larger ones, 1,500 employee telecommunications company, 166 enrolled, generated $272,000 in premium and $109,000 in comp to our broker partner. So you can see that, again, across industries, this can really create, a lot of production, participation, and compensation for your firm. Now, what we specialize here at the Voluntary Benefit Shop is really helping firms such as the ones you work with take advantage and create this opportunity. So, we have a whole process for really creating a pipeline for these type of cases. We're going to do an educational product rollout with your team, provide product introduction emails and one-pagers that can be utilized to help set appointments. Many organizations, broker organizations, have us co-host educational webinars for their clients where we'll pick some specific times. Your agency will invite their clients to attend these webinars. They can, select a time that works for you. And then we co-host a webinar along with you for your clients on these types of products. We'll also do cross-sell sessions with your account managers, producers, and consultants to identify the best potential candidates and then really help to manage that pipeline on an ongoing basis. Keep in mind that we're providing all the due diligence and recommendation process. So we're taking care of all that, providing our block underwriting offers, our preferred block underwriting offers, which are giving your clients higher levels of guaranteed issue with virtually no participation requirements from the carriers that we work with. And we're going to conduct all the client decision maker presentations. So your staff doesn't need to become an expert. You don't have to become an expert on this. We're the experts that you bring in to handle it. And then once the client says go, it gets handed off to my dedicated case management team. And they're going to create an implementation timeline, an engagement campaign, oversee the platform setup. We're going to conduct the educational webinars, provide access to our benefit education call center, as well as providing status updates to you and your client throughout that enrollment process. We'll also audit the carrier invoices and provide ongoing billing and claims service and conduct an annual open enrollment for the product. Now, the key to the types of results that we receive, and guys, we're wrapping this up, but the key to this is the engagement campaign. This is a product that takes a lot of education at the employee level in order to gain interest. You can't just throw this on a platform and expect people to enroll. It doesn't work that way. So we have a whole engagement campaign that consists of live and recorded webinars, email content, video content, digital content, a whole series of things that go out to clients. Here's an example of what some of these communications look like. And this one says Allstate, but it could say Transamerica, it could say, Chubb, it could say MetLife, any of the carriers that have these products. And you can see there's various spots where the employee would click to either schedule a call or to enroll or waive or to access the digital resources. And then they get subsequent communications that have animated videos as part of it. They're 45 to 60-second animated videos on long-term care topics. What is long-term care? What does long-term care cost? What is guaranteed issue? There's a whole series of these that go out throughout the enrollment campaign. Here's another one on guaranteed issue, all designed to push employees through the education process and get them to become educated so that they can make an informed elect or decline decision. participation. And that's really the secret to really getting the type of participation that we get. So with that said, I'm going to wrap it up and just pause and see if anyone has any questions thus far. Does anybody have any questions for us? Feel free to unmute and ask questions. And Chelsea, do we have anything in chat?
We do not have anything in chat.
Does anyone have any questions on what we talked about so far? Feel free to unmute and ask a question. It's usually the first one, like, opens up the floodgate. So any questions at all? Okay. Hey, I'll just wrap up with a couple things here. All we need to get started to help you get quotes for this is just a basic census, and the address and name of the organization. So if you're interested in looking at this for some of your clients, you're interested in putting a program in place to help you and or your staff really use Life with LTC to create revenue in 2025, certainly reach out to us here at the VB shop. I'm going to pull my contact information back up here. Here's my contact information if you want to reach out, and we can help you with this. So again, certainly feel free to reach out with any questions, any opportunities that you want to talk about, or if you just want to talk about how to kick this off with your team. And before we go, I do want to promote the webinars that we have coming up here. Again, next week we have a legislative update coming up, and on February 20th we'll be breaking down all the carriers with these life with long-term care products, and just kind of give you a snapshot of what each of the products look like. So those are coming up. Mark your calendars for that. Be on the lookout for the invites, and I will open it up one last time to see, does anyone have any questions before we sign off? Anyone have any questions at all? Okay. Hey, really appreciate your time today. Thanks for spending part of your Thursday with us today. We appreciate all of you, and feel free to reach out if you have any questions. We're here to help, and we appreciate your time today. Thank you so much.